at that level, you do have a $1,625 deductible. If there is an incident, let's say it's like your personal Range Rover, your personal Audi, your personal BMW, that doesn't have loss of rental revenue, reimbursement, etc. But you do get to keep 80% of the revenue. Hello and welcome back to Car Rental University. I am your host, Alex Withrow. Today we are going to talk about which insurance plan should you use should you list your cars on Turo. Before I get into that, click below, grab the 5 things you must do before starting a car rental business. Lots of great information in there. That also includes the Car Share Growth Guide, which gives you a city by city breakdown of which car share platform is strongest in your area. Check it out. There's been a lot of interest in Turo. I know over the last 6 months online, I get this question a fair amount. Which insurance plan should I use when it comes to sharing cars on Turo? What I really like about Turo's insurance system, and frankly, I don't know why other car share platforms haven't adopted this system because it's so good. Turo has really built a nice system designed to grow with your fleet as you grow. And so that's really the key delineation and differentiation between all the different levels is it's designed for how many cars you have. If you only have one car or 2 cars, and if this is like your car and you're driving this on the regular, but you want to share it on the weekends because you want to, get a little extra money to pay off the bank note, but you would definitely be not okay with a scratch or a nick on the car. Let's say it's like your personal Range Rover, your personal Audi, your personal BMW, which by the way, this accounts for probably about 80% of the hosts on Turo. So if that is you, I would definitely recommend the 60-40 plan. 0 deductible, they cover all the nicks and cuts. If there is any situation where the car is out of commission for a week or 2, you get loss of rental use reimbursement for revenue. That's awesome. But they also take a 60-40 cut. So that plan is ideal for someone who is putting their personal car out on Turo and is just looking to make $500 or $600 a month, maybe $700 a month, just to pay off the bank note and the auto loan on the car. If you do have a nicer car, but you are planning to use this car specifically for rentals, but you only have 1 or 2 cars, I would definitely recommend the 75 plan at the $250 deductible. Now, they don't cover small nicks and cuts on the repair plan, and the reimbursement revenue is a little lower than it would be on the 60-40 plan. However, you do get some coverage. Now, what I would say is that the time to move up to the 80 plan or the 85 plan, I would move to the 80 plan if I had 3 to 5 cars. You get 80% of the trip price and you have a $750 deductible. When you have 3 to 5 cars, you are making enough revenue at that point where a $750 deductible is not that big of a deal. You will feel that more if you only have 1 car. So if you only have 1 car, I wouldn't use that plan because $750 is, a chunk of change if you're only renting 1 car. That's probably 2 or 3 weeks worth of revenue. With the 80 plan, if you have 3 to 5 cars, I think that the 80 plan makes sense for you. But keep in mind, this doesn't have wear and tear reimbursement, it doesn't have loss of rental revenue reimbursement, etc. But you do get to keep 80% of the revenue. Now, when you get up to maybe 10 cars, maybe 12 cars, then I would definitely recommend the 85 plan. At that point, you're gonna really keep a good chunk of that revenue and you're gonna be rolling, no pun intended. So at that level, you do have a $1,625 deductible. If there is an incident, it's not going to be that bad because at that point, you're going to be making probably $10,000 to $15,000 a month in revenue. That's pretty solid, and a $1,600 deductible, it's like whatever, not a big deal. And then lastly, the 90 plan is really designed for a more scaled operator. So if you're at 20, 25 cars or more, I would put it probably at the 90 plan. It's a $2,500 deductible, but at that point, you're pulling $20,000 to $30,000 a month in revenue or more, depending on how many cars you have. So a $2,500 deductible, basically that gives you kind of a base level liability insurance so you don't get sued. Turo will handle any costs above that $2,500 deductible. Obviously, there's no vehicle reimbursement, loss of rental revenue, obviously. I do think that's like a great option for a very scaled provider. Now, in comparison, like if you have 25 or 30 cars on Getaround or Hyrecar, if you had that many cars on Hyrecar, probably about half of them would be crashed within 3 months. But if you had that that many cars on Getaround, they don't have an option other than their 60-40 split. So in my opinion, it's super frustrating from a scaled standpoint, but I do think that there are some benefits with working with Getaround in that regard in terms of the maintenance is a lot easier. With a 90-10 plan on Turo, it really does give you a nice revenue split if you are at that really high level amount of cars, 25 or more. So that's basically my recommendation. I would say that when they built this insurance system, they really incentivized people to grow their fleets based on this insurance system. And obviously it's worked. I mean, Turo's already at like 750 million a year in revenue as a company. It is incentivizing growth. So overall, that's how I would handle their insurance system. Like I said, it's my favorite insurance system. I love it. It's so customizable. And I think it really is designed to grow with fleet owners. Drop some questions if you have anything more. And before I go, click below, grab the 5 things you must do before starting a car rental business. I will catch you in the next episode. Thank you.